Today is June 23rd, 2016, and this is the ADM Investor Services Weekly Market Update. The thoughts and opinions expressed in this video are solely the thoughts and opinions of our guests and should not be construed as the thoughts or opinions of ADM Investor Services or Archer Daniels Midland Company. With us today are Steve Freed, Vice President of Grain Research at ADMIS, and Alan Bush, the Senior Financial Economist. Big news today is the vote is currently being undertaken in the United Kingdom.
Yes.
On the referendum regarding the Brexit. Alan?
Yes, this is a very pivotal event, and this has been closely monitored for quite some time. The latest is that the polls are slightly in favor of the stay campaign. Also, markets are reflecting that view with stock index futures sharply higher. We're also seeing some of the flight to quality vehicles coming under some pressure, such as gold a little bit lower, and also the bond market is coming under a little bit of pressure.
So the polls tonight, I believe, will close at 10 p.m. in the UK, which is 4 p.m. Chicago time. So volatility could start in our markets as early as this evening?
It's actually started now, but you're absolutely correct. The volatility will accelerate, and we should get a final announcement at 1 a.m. Tomorrow morning. So it's going to be quite a while before we actually know what the results are, but we will have some information along the way as far as how the vote is going from certain districts. So the volatility is going to remain very high throughout the day, and of course then once we get that final announcement.
So how about some comments on if the UK stays, well, how does that affect the markets? And if the UK decides to leave, how does that affect the market?
Okay, well, a stay vote will be very bullish for stock index futures. It will be very bearish for the British pound. Some analysts are thinking, if that's, I'm talking about the leave vote, would be very bearish, would be very bullish if the remain vote prevails. We feel, though, that regardless of the outcome, that after the referendum is out of the way, we want to use every opportunity as far as any kind of break in the stock indices to be used as a situation to come in on the long side. We also feel the same thing for gold and silver. Any breaks should be used as a buying opportunity.
Thinking that, uncertainty in general always weighs a bit heavy on the market.
Yes. Yeah, uncertainty often means lower prices, and we are now advising, with this referendum ongoing and a result, of course, to be announced later tomorrow morning, this is a great time to stay out of the markets. Let things settle down, come back in later tomorrow or some other time, but now is not a time to be putting on any type of large positions.
Steve, staying with the Brexit item, what impact will this vote have on grain markets?
I think initially the grain market feels that it will have very little impact on the grains. We're trading weather, we're trading demand, but obviously if they stay and the dollar goes lower, it makes U.S. exports more competitive.
The grains have traded lower this week, led by corn. Why?
On Friday of last week, the 2-week weather forecast from the Midwest was warm and dry. On Sunday, it changed to a more normal pattern. We've had rains across the central Midwest since then. So I think a lot of the speculative longs who bought the El Nino type La Nina switch could be harmful to this year's corn crop are exiting.
And wheat prices are very low. Why are wheat prices so low right now?
There's too much wheat in the world. Everybody has an excess. We don't see the demand on the export side to bring that level down, and now wheat's trying to price itself in some locations as a feed grain. So it's kind of a domino effect. If corn prices go down, wheat prices have to follow to be fed.
China keeps buying soybeans. Is the USDA too low on their estimate of U.S. soybean exports?
Yes. Today's total commitment of beans for this year is a little over 1.8 billion bushels. It's similar to last year. USDA currently estimates the exports at 1.76 billion, and last year was 1.89. So we think in this June 30th report they're going to have to raise old crop export demand. They estimate next year's at 1.9 billion. and we already think it's going to be closer to 2 billion. So you could take next year's 260 carryout, take 100 off next year's exports, maybe 60 off this year, and all of a sudden you have a carryout of 100 million bushels in beans for next year.
Recently, the gold market fluctuated on the latest Brexit referendum polls. When the polls close, what will be the effect on gold futures?
Well, it all depends on the outcome. If the Remain camp is victorious, we will see precious metals, gold, coming under some pressure. If the Leave campaign wins, of course, then we'll see gold moving higher. Our feeling is, though, that once the referendum is out of the way, that the fundamentals will reassert themselves and traders will be looking at inflation and interest rates, which in our view will continue to be very bullish for gold and silver, which is why I am holding the bullish coffee cup right now. Got to be long gold and silver on any break.
You mentioned interest rates. What's going on with interest rates right now? I know that Yellen was being grilled a bit this week.
Right. Yellen gave testimony to the House and Senate committees. Apparently, the Fed is not quite as optimistic on the economy as they had been several weeks ago. That would suggest that the Fed may be raising rates only one time this year, probably in December. So a Fed that is slow to raise rates and an inflation level that is starting to accelerate globally remains two very bullish fundamentals for the precious metals markets.
Steve, recently you've talked about commodities being at a crossroads right now, many of the commodities, in regard to which direction they will take here moving into the summer. Has that changed at all? I mean, what are your thoughts there?
No, if you start with the stock market, we're at a trading range, and it seems like whether it's Brexit or whether it's global economy or whether it's interest rates, it looks like it's about ready to break out one side or the other. And as Alan said, the path of least resistance might be up once all this information is behind us. Look at a gold chart. It's at the lower end of a trading range, and with open interest and strongly on the long side, it needs to hold this support, or it could see some weakness. The grains have topped, and it looks like corn has made a top, and so we're below $4 on the December contract today. So earlier, an analyst said that if we get normal weather, we're going down to 330. On the December corn for a fall low. So it's at an important price. And as far as soybeans are concerned, we're right at $11. And what was interesting, that same analyst said that the harvest prices in soybeans will be at $12.80. So we'll need to hold this support here in the beans. And if it's right, we've never seen anything like $12.80 beans and $3.30 corn at the same exact time.
If the corn is topped, what should the farmer be doing right now?
Well, I think we've been telling farmers all along to sell cash. This week we told them the top was in. And they have been selling cash. Reflected in the basis levels, whether you're a feeder or an ethanol producer, you've backed the basis off. You've got good ownership. So the farmer should continue to sell as long as it looks favorable for his crop. Usually, let's say he gets 150 bushel corn. He sells maybe 75 of that. Well, if he gets 250 bushel corn, he should increase his sales on what he's sold already. Because, a 70-cent break from here does affect your income by quite a bit. If 2 weeks from now there is a concern about weather as we go through pollination, he can always come in and buy calves to replace the inventory that he sold.
So any words of wisdom to these guys that are looking at making plays in the market right now, going into a very important worldwide vote?
I think the words of wisdom are stand aside for now, wait for the referendum results, and then the main trend, in fact, I should say the main trends will reassert themselves. That is higher stock index futures, higher precious metals, and higher industrial commodities.
And I think for the soybean market, after the August crop report, they should be looking at thinking about buying soybeans.
Remember, the thoughts and opinions expressed today are solely those of our guests and should not be construed as the thoughts or opinions of ADM Investor Services or Archer Daniels Midland Company. If you want more information about ADM Investor Services, our brokerage services, or our risk management services, please contact www.admisresearch.com. www.admis.com.